Welcome back to BWNN, folks. I'm Billy Bob, and joining me today is our resident market wizard, Sarah. Sarah, you've been talking up this relative strength matrix for weeks. For our new viewers, what exactly is it, and why should they care?
Thanks, Billy Bob. Great question. The relative strength matrix, or RSM, is not just another indicator. It's a powerful multi-time frame diagnostic tool. Think of it as an X-ray for a stock's momentum across different time horizons, from short-term 63 days to long-term 1,260 days. It tells us not just if a stock is strong, but how strong and where that strength is coming from.
Okay, so it's like looking at a stock's health report card over different school terms? Short-term grades versus long-term averages?
Exactly. And the magic happens when you look at the relationship between these different time frames. As we discussed, a key signal is when the shorter-term RS, say RS 63, is above 50% and trending higher, while also being stronger than the longer-term RS, like RS 126. That's the classic sign of a nascent uptrend gaining steam. We saw this beautifully with Cadence Design Systems, CDNS, in our first image. Look here, Billy Bob. On the ThinkorSwim chart and the bottom of the chart is the relative strength understudies. We have our RSM lines. Notice how the purple line, which represents RS 63, has just crossed above 50%. It's now pushing towards 80%. Crucially, it's trading above the cyan line, RS 126. This tells us the recent 3-month momentum is outpacing the 6-month trend, a very bullish confluence. The price action above confirms this, breaking out of a consolidation pattern.
So if I'm scanning, I'm looking for stocks where RS 63 is crossing above 50 and is higher than RS 126. That's my starting point for potential winners?
Precisely. That's your pre-scan filter. You're hunting for stocks that are just beginning to show signs of life. But remember, Billy Bob, technicals alone aren't enough. We need to pair this with fundamental analysis to find companies that are not only technically strong, but also fundamentally sound. That's where our second image comes in. This is the same company, CDNS, but now we're looking at its financial health over the past 5 years. We can see its gross profit margin, GPM, is a robust 85.5%, and its operating profit margin, OPM, is a healthy 20.3%. Both are positive and stable. Earnings per share, EPS, is $3.80, and free cash flow per share is $5.40. All positive and growing. The current ratio is 3.0 and the quick ratio is 2.6, meaning it has more than enough liquidity to cover its short-term obligations. This isn't a speculative gamble. It's a financially healthy company whose stock is now showing strong technical momentum.
Got it. So the RSM gives us the when and the how strong, and the fundamentals give us the why and the is this company solid. Combine them, and you've got a high probability setup.
Absolutely. Now let's talk about the practical application. How do we actually find these stocks? We use the scanner. In ThinkorSwim, you can build a custom scan using the RSM study. Let's walk through it. Here we are in the scanner. First, I select Add Filter, then Study. I search for TA relative strength. From the drop-down, I select RS 63. Then I set the condition, is greater than an input 50. I click Save.
So that's our first filter, RS 63 greater than 50.
Correct. Now I add another filter. Again, Add Filter, Study, TA relative strength, but this time I select RS 126. I set the condition to is greater than 50. I save that too.
Wait, so now we're looking for stocks where both RS 63 and RS 126 are above 50? Isn't that just finding the strongest stocks overall?
Good catch, Billy Bob. That's one way to do it. But to find those emerging trends, the ones that are just starting to break out, we might want to be more specific. Instead of just greater than 50 for RS 126, we could set a condition that RS 63 is greater than RS 126. That would pinpoint stocks where the short-term momentum is overtaking the medium-term trend, signaling a potential acceleration phase. We can even save this entire scan as scan_RS 63_126 for future use.
All right, so we've built our scan. What's next? Do we just buy everything that pops up?
No. The scan is just the first step. It's our fishing net. We then take the results and put them into our full RSM matrix, like the one shown in picture 3. This scan acts as a pre-filter. We can use this scan to filter the S&P 500, NASDAQ 100, Russell 2000, and so on. The S&P 500 has about 503 stocks, and that is too many stocks for the ThinkorSwim quote table to handle. It is likely to be a memory constraint in ThinkorSwim. Hence, we use the pre-filter and just load the stocks that meet the criteria. There are then less stocks to load into the ThinkorSwim quote table, or what we call the relative strength matrix, to analyze. Here, we have a comprehensive view of dozens of stocks. We can sort by any column. For instance, sorting by RS63 in descending order puts the strongest short-term performers at the top. We can then visually inspect the matrix for patterns. Is RS63 greater than RS126 greater than RS252? That's a very strong multi-time frame uptrend. Or maybe we see a stock where RS63 is low, but RS126 is high. That might indicate a pullback in a longer-term uptrend, which could be a buying opportunity. The matrix lets us compare hundreds of stocks at a glance.
That's incredible. So to summarize for our viewers, use the RSM to identify stocks with emerging or accelerating uptrends, combine that with fundamental screening for financial health, and then use the matrix to compare and prioritize your findings. It's a complete system.
You've nailed it, Billy Bob. It's about combining the best of both worlds: technical analysis for timing and momentum, and fundamental analysis for quality and sustainability. The relative strength matrix is the engine that drives the technical side of that equation. It's not a crystal ball, but it's one of the most powerful tools we have for identifying high probability setups before they become obvious to everyone else. In this quote table, we have many columns. We have mixed the relative strength matrix with the key financial metrics. At a glance, we can see the relative strength and the key financial metrics displayed together on the same table. Each column can be sorted to get a different perspective, possibilities, and potential of each stock. Furthermore, this can be exported to Microsoft Excel spreadsheet. So it is possible to scan the S&P 500, NASDAQ Composite, Dow Jones Industrial, Russell 2000, and each of these scans can be exported to Microsoft Excel spreadsheet for further analysis.
This is amazing. So you are pre-filtering the whole stock market. You are teaching our viewers how to be a power user of ThinkorSwim.
Yes. We want our viewers to be able to use the ThinkorSwim platform successfully. From these stocks, we will pick up a few stocks for more detailed analysis and put them on our watch list. The best of these stocks will eventually enter our trading or investment portfolio. That is how we create our edge and success in our investment.
Well, there you have it, folks. If you want to find the stocks that are just starting to run, start with the RSM. Thanks, Sarah.
My pleasure, Billy Bob. Happy hunting, everyone.
BWNN is dedicated to research the businesses behind the stock names. Our research are done with artificial intelligence assistance using the best practices in the industry. The business phase growth chart is taken from Stock Simplifier. Please note that investing carries its own risk, and you should do your own research before committing any stocks to your own portfolio. Until next time, this is Billy Bob signing off from Build Wealth Now News. Trade safe.